Hello everyone, how are you? I'm Barbara Stover with Rodeo Realty, and today we are going to talk to Kerry Gelbard with LA Mortgage, and I'm so excited because I'm going to ask him questions about international buyers. What are the rates now in terms of loans, and what are the best things that we should do, especially if you're a new buyer? What should you look for? So Kerry, thank you so much for joining me.
Well, thanks for having me here.
Yes.
Hi everybody. So Barbara wants me to touch a little bit on international borrowers, and they're a little bit different than someone who has residency here in the United States, because many of them come from abroad and want to buy real estate, and they don't have yet a tax ID number, Social Security card obviously, they may not have U.S. credit, their assets may be abroad and may not be here in the U.S., so each individual is going to have to fall into a different bucket, if you want to call it,
different category and
based upon where they stand. Someone who has a tax ID number and a credit report will be in one bucket.
Okay.
Someone who doesn't may be in another bucket. And what I suggest to many of them is if they have a banking relationship with an institution in their country, that perhaps that institution provides financing for real estate when they do come to buy it here in the U.S.
Oh,
so that's always a good place to start.
Because I don't know what to tell them when they come to me, and it's like, and I should actually know. So I'm running into a lot of international buyers. So I'm excited about this.
Yeah, I mean, a lot of them don't have earned income here in the States. So typically they're buying the property obviously as a rental property because they can't have residency here.
Correct.
They don't have the ability to reside here as either a permanent home or a second home. So typically most lenders would use the proposed rent for that property as the income of that borrower to cover the mortgage payment, taxes, insurance, or debt service the property. So that's how they use, from an income standpoint, the qualifying of each borrower.
Okay.
And then they have to meet the other criteria, obviously the down payment requirements, any credit criteria, as well as having a tax ID number, and that's easy to get. Typically on the IRS website, you can get a tax ID number.
Okay, and a question for you: how long does this process take?
It depends. I mean, some people can get this done very quickly. They come over, they get a tax ID number, they establish credit very quickly, whether it's existing credit, they get populated to a U.S. credit report. Some will establish a bank account here and move their funds over to the U.S. so we can document their funds. Obviously, the amount that the home they're buying will rent for is part of the appraisal process. So the appraiser will go to the home, and in addition to appraising that home for value, they will do a rent survey and give us what the proposed rent would be. And the lenders will use a portion of that rent, not 100% of that rent, and there's a formula depending upon which lender and which loan product, and that's how they determine how you qualify. So that's why it's a good idea to sit down with someone quickly, or even before you start looking, run through what the requirements are of the borrower, run through their particular qualifications, and then figure out what bucket they fall into, which program they would go to, what lender they would go to, or if they're best to work with their own bank. And there are a lot of banks here that they can go to directly that have a lot of what we call foreign national programs. And that's what they're considered from a lending standpoint, foreign nationals, because they don't have permanent residency.
Wow, oh my gosh, that's really good. This is good information, and I'm sure a lot of people don't know that, so I think this is great. And also, I want to talk about the rates.
Well, rates on these type of loans typically are adjustable programs, depending again on the loan to value, the loan size, the credit score, if they have a credit score. Some of the loans start in the low fives, some get into the fours. They are higher than your traditional mortgages, but again,
so
it
the
just
rates
depends.
for the international buyers are different.
They're going to be different than a borrower who lives here that's owner-occupied with full income documentation and things of that nature. They're typically going to be adjustable, and they're going to be slightly above the market rate for a traditional 30-year mortgage or a traditional adjustable mortgage.
And one more question, what about just the regular rate for people who live here?
Yeah, I mean, regular rates for people who live here, again, depending upon the property type, loan to value, you're going to run in a range on a fixed rate from, slightly above the mid threes into the very, very low fours, or just above 4%. Again, someone buying a home who's putting a small down payment, getting a 95% loan with a lower credit score is going to get a higher rate than someone who's putting 20 or 25% down with a high credit score. So it just depends, but those are still about 0.75% lower than we were a year ago at this point. So
the
they're
rates are
very
still
aggressive. And we'll see what happens through the rest of the year if the economy continues on its path, if the
Right.
Fed has future rate cuts, and how that impacts mortgage rates going forward. I think we're going to all be surprised where rates end up this year as opposed to where we ended last year. Obviously, they'll be much better.
Well, thank you so much, Kerry Gelbard with LA Mortgage. We really appreciate your time here.
It's my pleasure.
Yeah,
Thanks for
thank
having
you.
me.
And if you have any questions, please post your comments or subscribe to my channel because I would love to hear from you if you have any real estate questions. I'm here for you. Thank you. Talk to you soon. Bye.
Bye-bye.